Welcome back to another Trade Alts technical analysis tutorial. This is Ichimoku volume number 4, where we're going to focus specifically on the Kumo, or the cloud, and kind of go in depth about what the cloud is, things to look for, and how to trade it. So with that being said, let's get to the video. So you might recognize this slide. This is from Ichimoku number 1, where I kind of did a very broad overview. Didn't get in super detail about every aspect of Ichimoku and kind of what to look for. Just a very broad overview just to get an introduction to it. But again, this video is about the Kumo specifically, so I want to go over this part of that. And basically, the Kumo itself, so I mean, you can see here, it's not a great zone to trade when you're in the Kumo or inside the cloud, except for there's a specific setup called the edge-to-edge setup, which again, I'm going to do that in a different video very soon. And it can be a very choppy area to trade. So for those of you right now who are trading, especially using Ichimoku on Bitcoin, you can kind of understand where I'm coming from with that, where when price enters cloud, it's kind of a dangerous, it's definitely a higher risk area to trade, right? Which we can actually go over that a little bit later. And another important thing, which I thought was important to reiterate, is that thick clouds often show strong support resistance levels. And those are typically the ones that you really want to be aware of, versus thin clouds that show weak support or resistance. So again, this is another, it's very relevant to today on Bitcoin. So we're going to go ahead and take a look at that a little bit later. But that's something to remember. And then finally, flat clouds can be a magnet for price, which if you're again familiar with the edge-to-edge setup, that's kind of the area that we look for as far as targets go. And part of the reason for that is because, again, flat clouds, they act as a magnet for price oftentimes, and they're very strong levels. So that's typically why when there's a noticeable area that is, as far as on the Kumo, that's very flat, that we tend to pay attention to where that is. And then finally, calculate on the bottom. The cloud, the Kumo, right? It is literally the area between SENKOU span A and SENKOU span B. So here in this picture, I know I have these green arrows, but that's actually for a different video. But the green line that is here, that is SENKOU span A. The red line here is SENKOU span B, and you can see that the cloud is shaded in green. That means that that is a bullish cloud. Might have different, you can change your setup, your settings on your Ichimoku indicator to whatever colors you like, but for my color scheme that I go to, it's just easier for me. When things are red, they're bearish. When things are green, they're bullish. So that's what that's about. Now, again, using Kumo to trade, right? So now we're going to get a little bit more specifics about it. When price is above the cloud or Kumo, you're typically only looking for long trades. So this is trying to keep things as simple as possible. Again, price above the cloud, typically you're looking for long trades. You don't want to go counter trend, especially if, again, price is above cloud. When price is below cloud, you typically only want to look for short trades. So the reverse is true as well, right? Price above Kumo, long. Price below Kumo, short. A tip, which this goes to, again, what I just said, looking at where price is in relation to Kumo. It's great for quick analysis when scrolling through charts. I have hundreds of charts that I look at from time to time. And one of the ways that I like to look at, one of the metrics that I like to use sometimes is basically where is price in relation to cloud. So as I'm scrolling through these charts, I can determine within 1 or 2 seconds immediately if that asset is bearish or bullish, right? Then, or in a range, for example, which we'll get into later on. And then that determines to me again if I can see very quickly if I'm interested in looking for a specific trade on that asset. So I think Ichimoku, again, great, outstanding tool to be able to use and identify very quickly if something is bullish or bearish or in a range. And it's one of the things that I like to use when I'm scrolling through my charts. That way I get, again, a quick idea. I don't have to do a huge thorough analysis on it. It's going to give you a very quick glance at something, and you're going to know, again, whether it's bearish or bullish. So on to SENKOU span A, which again is the green line. So this is the green line that you see here. And I'm gonna discuss things in terms of using the doubled settings that I like to use for crypto. So when I'm trading crypto, which is mostly what my channel is about, typically most often you'll find me using the doubled settings, which is 20, 60, 120, 30. So SENKOU span A displays a shorter term trend. It's basically telling you what the shorter term trend is looking like, and equilibrium points that are derived from the Tenkin and Kijun. Okay, because that's how SENKOU span A is actually calculated. That's the formula for it. It's basically your Tenkin and your Kijun values divided by 2, but then they take that value and they forecast it 30 periods ahead. So why do they do that? That's how you get your future support and resistance level. So that's why, I guess, another thing I love about Ichimoku is that time is as important, if not more important, than what current price is doing in a way. And Ichimoku gives you, when it does the forecasting. So again, when cloud is forecasted 30 periods ahead, if you're using standard settings, it's 26 periods ahead, but it's giving you future support and resistance levels to pay attention to. And there's just not a lot of other indicators out there, systems that are going to give you forward thinking, support resistance levels to trade off of. So that's SENKOU span A. So SENKOU span B, which is the bottom of the cloud here. There's a red line that you see, and it's on the bottom because cloud is bullish. So again, notated here by the green color inside of the cloud. But again, SENKOU span B is represented by this red line that you see here. And what is SENKOU span B? Well, or what does it indicate? It basically measures longer term equilibrium points that are derived from the overall high. So this is how it's calculated. So it's taking the overall high and the overall low of the previous 120 periods. So for instance, if you're using a daily time frame, it takes the overall high and the overall low over the previous 120 periods or days, 120 days. And then it takes that value, so basically adds them together and then divides it by 2. So it gives you the average of the high and the low. All right. And it takes that average and it forecasts it 30 periods ahead. So what's another thing that it gives you besides the equilibrium points in the future that are again derived from current price, but they definitely become relevant again in the future when price is actually trading above or below cloud. Another thing it gives you is it gives you the future support and resistance levels. So that you just learned how SENKOU span A and SENKOU span B are calculated, where they come from, what's important about them. But the most important and simple thing to take away from that is their support and resistance. The thicker the cloud, the more strong support or resistance that level is likely to be. The thinner the cloud, the weaker or the less powerful those support and resistance lines are going to be, speaking specifically about the cloud. So here we get to the Kumo twist. See the same cloud here, the same chart we've seen earlier. And basically you can see SENKOU span A, this green line, SENKOU span B, this red line here, cloud is bullish. And then SENKOU span A bearishly crosses SENKOU span B, which turns your cloud red. And what does that mean? Well, that means cloud is now bearish, right? So the Kumo twist is literally where this period is here, or so you can see where this crosses, which flips the cloud color, right? So from green to red, this exact crossing point here is called a Kumo twist. So a bullish Kumo twist occurs when SENKOU span A bullishly crosses SENKOU span B, which is not this example that you see here. A bearish Kumo twist occurs when SENKOU span A bearishly crosses SENKOU span B, which is exactly what you see here, meaning that cloud was once bullish. You get your bearish Kumo twist here. Now the cloud is bearish. And you can also, another example is you see cloud's relatively thin here, and it starts to get wider and wider and wider to finally you see this pretty big cloud. And at the end of it here, you see price comes up to it, and where is price finding resistance? The bottom of the cloud. So that is what a Kumo twist is. So what does a Kumo twist signify? So this is really important to understand. This is probably, I mean, this is definitely one of the most important things I think you need to learn when it comes to Ichimoku. So Kumo twists signify that a potential trend change could be underway. And you notice I say could because, and we'll get into it in a few slides on what also could be taking place. But for the most part, whenever you get a Kumo twist, it's telling you that the trend that was, or that was previously the dominant trend, could very well be underway. And if you remember, the Kumo or the cloud is forecasted 30 periods ahead. So you have this information well ahead of time, right? You don't have to wait for price to come to this point here before you say, okay, you know, here's where cloud flips bearish. Now we're bearish. You have this information technically. Again, this is not a good picture for this slide, to be honest, because cloud is forecasted 30 periods ahead of where price is always. It will always be that way. So again, Kumo twists signify that a potential trend change could be underway. That's very important to understand. When SENKOU span A is above SENKOU span B, like I already said this, cloud is bullish. When SENKOU span A is below SENKOU span B, again, green line crosses, now it's underneath the red line here, then cloud is bearish. So here is an example. And you notice that massive caution sign right there. This is one of the weak points when it comes to using Ichimoku if you're unable to recognize relatively early that you are about to enter a range. So I'm going to try to help you with that. Identifying ranging price actions, or PA stands for price action in this case. So some important stuff. When you have a flat Kumo with multiple Kumo twists, so what I mean by flat Kumo is you see here how things flatten out and basically go sideways. So I'm going to show you the actual chart of this. But when you have a flat Kumo and it twists and turns multiple times going sideways, that is a sign that price has entered into a ranging environment. And as you know, or may not know, Ichimoku is a trending indicator. Like that really helps identify and helps keep you in the trade. And it works incredibly well when price is trending one direction. So if price is moving to the upside, and you have a really strong trend to the upside, Ichimoku is phenomenal. When you have a strong trend to the downside, or just a general trend, again, Ichimoku is phenomenal. In a ranging environment, Ichimoku kind of becomes a nightmare if you're unable to recognize it early on, because you can get absolutely chopped to pieces trying to trade every single signal that you see. And if you're not able to identify that, again, it's in a range. So you can see very clearly here, price goes up. It literally goes above and below clouds several times. Every trade that you're trying to take here, more than likely you're on the wrong side of, or you get stopped out, right? So this, and again, we'll zoom into this to show you a little bit easier what that actually looks like. But you should definitely exercise caution in a ranging environment, as you may get fake out. So you can, again, just what I said, if you're trying to trade Ichimoku signals, on that very chart you're looking at, you're probably getting destroyed. Over here works incredible. So this is what I'm talking about. You have a beautiful trend to the downside, very clear, definitive trend, keeps you in the trade. And then the same thing here, right? Price like crosses up to the upside. You get a nice clear move. You see it follows it pretty nicely. And then you get the beginning of this trend, which is devastating sometimes. Like if you're sticking to your guns trying to trade this indicator, you're likely not to do very well, again, trading a range like that. Which, if you want to learn how to trade ranges, I do have a range trading module that is several videos long. And I think that you're likely to find a bit more success if you were to use that method of trading a range versus trying to use Ichimoku. So level to level, for those of you in Discord, especially VIP, you know exactly what I'm talking about when I say level to level. And with Ichimoku, it's no different really. And I use this to trade Ichimoku the same way that I would trade support resistance levels, etc., because really it's the same thing. It's very similar. So obviously this series, or this particular module is about the Kumo. So we're going to talk specifically about that, but I want to explain how the Kumo comes into play when you're looking to enter a trade, and maybe what other levels using Ichimoku you might want to be paying attention to kind of prepare you for an upcoming trade. So first of all, when price moves above or below Kijun, which Kijun is so important, it's the yellow line that's notated on this chart right here. That is your Kijun, or some people call it your baseline. This is basically your equilibrium. This is a very, very, very important line. So when price moves above or below it, that's often an early warning sign of a potential trend change on lower time frames. Really, the Tenkin, which is your blue line that you can see in that chart, should also be included. But there are certain setups which we'll talk about, and it's very likely the next video, on like looking to enter trades using the Tenkin and Kijun. But the Tenkin should also be included in that as part of the level to level, because typically, as you can see here, if price is below your Tenkin and it starts to reclaim your Tenkin here and push above it, then you'll be looking for potential, when price comes up to touch your Kijun, for example, it has to get through your Tenkin first. So really, that's the first step of level to level. But I would argue that your Kijun is the more important line to be paying attention to when looking for trade entries or exits, or just managing your trade in general. When price enters cloud, okay, it can signal a potential range or consolidation forming. So it's just something to point out there. And again, when price enters cloud, in my opinion, it's kind of no man's land. It's very dangerous. It's very volatile a lot of times. And part of what can take place in a cloud is seeing a potential range or a consolidation within the cloud that forms. And people have a very hard time trading that for the most part. So typically, why I call it no man's land is when price is inside a cloud. Now, again, there's a very specific setup where I look to take, if price does enter cloud, but it has to meet certain criteria. And without all of those criteria and confirmations, I do not take this trade. And of course, the risk reward has to match what I want to see in that particular setup. But typically, when price is inside a cloud, I tend to stay away from that because it can be very choppy, right? So important thing to remember, when price does enter cloud, it can signal the beginning of a range or the beginning of a consolidation forming before, if it does, maybe it breaks below cloud again, and then you have your continuation of your bearish trend for this example, like that's something that could happen. Or you have, cloud ends up flipping bullish. In that instance, price breaks above, and then you have a different type of setup, like you have a bullish Kumo breakout essentially. And also, once price exits, so that's kind of where I was going with that. So once price exits and closes above or below Kumo, above or below cloud, right? Then that is one signal you can use to enter the trade. So I just went over level to level, basically different components of Ichimoku and kind of like how you could look at that very briefly. But we're going to go to a chart next and kind of talk you through some of the stuff that we've gone over in these slides. But I think that's one really important thing. Again, this video is specifically based on the Kumo, the cloud itself. So one important or one type of trade that you could be looking at when it comes to Ichimoku is, again, looking for those breaks above or below cloud, depending where price is at, right? And that is one signal that you can use to enter a trade. Right, so we're gonna do a little exercise where I'm just gonna go through some charts and kind of give you an idea again how quickly you should be able to determine if it's bullish or bearish, kind of like I mentioned earlier in the video. And then if I see anything of interest, obviously related to trading the Kumo, I will try to point it out. So I'm gonna be on a lower time frame. Typically I like to use a day time frame, but I'm going to be on a 4 hour just because, I mean, kind of like where we're at with the market right now, everything on higher time frames is going to look bearish. So it's going to be kind of cheating because I could say just about every asset that is here is going to be bearish. So I'm going to get a tiny bit, everything will probably still be bearish. So maybe maybe we should go over and look at some stocks. I'll kind of like change things up. But anyway, so here's Bitcoin very quickly, bearish. Why? Price below cloud. That's simple. That's all you have to do. Price is below cloud, bearish. And obviously bearish TK cross, the cloud itself is bearish. So you notice it's red, right? So cloud is bearish. Like very simple, but it can literally take you 2 seconds to figure that out. You start at the top. So here's 80A USD. Click on that, bearish. So split second, you already know. Cloud's bearish, price is below cloud clearly. This might be an interesting one to talk about Kumo trades, for example. So if you just, let me try to pick a point. Zoom in a little bit. I mean, here's a good place to start. So basically what happens, price comes up into cloud, bit choppy. Look at the resistance. So price breaks into cloud and you get your edge to edge trade. Where does it find resistance? Top of cloud, nice rejection off of that, and then proceeds to lose the Kijun. So again, you see Tenkin, kind of strike one, strike two, loses Kijun, closes below, and it's just barely below cloud here. You could have went short here. To be honest, but it's like, as far as where would your invalidation be, that would be a little bit tougher. You maybe, you know, in this particular instance, probably using market structure to help you. But there's not like a super clear invalidation for this short, because again, you're like trading literally right off the Kijun. This happens to line up right at the bottom of cloud. Ultimately though, what happens? Price cleanly breaks the bottom of cloud. So this is like cleanly telling you that price is looking to head lower at this point. What happens? Actually comes up, back test Kijun as resistance, and then ultimately rolls over, forms this long form consolidation. And then you get this. So here's your first candle. So like if you scroll through, here's your first candle that cleanly closes above Kijun. So what is this telling you? Well, if you're short, that kind of like the first warning sign, again, is losing your Kijun. So again, you're short, price pushes above Kijun and actually closes above. So that's like your first sign that's saying, hey, like the price could very well look to continue. Look how well it respected cloud. I mean, this is perfect right here. It's actually a really good example. But price respects cloud, cleanly gets a close inside. You have your bullish TK cross, you can span above price. What happens? Moves to the opposite edge of the cloud. And then really from there, so again, if you could have very well taken this long, this actually gave you a pretty decent long setup here, and then ultimately broke above. So like this is a bullish Kumo breakout. Obviously, like you don't have cloud support back here though. So if I was to go back to around here, to kind of give you an idea, the thing is, if you watch the first couple videos where I talk about optimal entries, you really don't have one. So like this literally was your edge to edge entry right here. So it gave it to you very early on, and your invalidation super close by. This ended up being a nice trade. So there's basically your edge to edge being hit. I speed it up a little bit more. So there you go. So back on that candle right here. So you had a clean break. Obviously this is very bullish. Angulation is very bullish. If you wanted to, you could have taken this trade against not an optimal entry, like I talk about in the first couple videos, but this is a Kumo breakout. Typically you want to wait for your cloud to flip bullish, that way it gives you the support, but you could take this trade. And then here you go. So it comes back in, test your Tenkin, which by the way, again, Kijun would really be, for like a setup like this, I'm kind of looking at my Kijun to see as far as where would my stop loss be. So there's price chopping around, cloud's getting real thin right here. Looks like it's going to bullishly cross, and there you go. So you have a bullish Kumo twist. You have your Tenkin and Kijun, very bullish angulation there. And now your price is above cloud. This is bullish. So you have everything for you. And you notice what happened, right? What happened as soon as you had all four? Price above cloud, Chiku span above price and cloud, bullish Kumo twist, and a bullish TK cross. Look at what the price is doing. So you have your optimal entry. I don't know, you have to go back. It's probably back a couple bars, maybe like 1 or 2 bars. But again, you're seeing what's happening after that takes place. And then price, obviously. So at this point, kind of like your first, wow, look at that. So here you go. And kind of the nice thing about this is your Tenkan and Kijun are remaining pretty close together. So the first thing that I'm going to be looking at when I have trend this strong, okay, is and if you remember one of the last slides that we looked at is level to level. So like I'm looking at Tenkan remaining as support. Like look at this beautiful support that Tenkan has been so far. If Tenkan is lost, your next level that you're looking for is your Kijun, right? Typically, if you're long here, your stop loss is going to be somewhere behind Kijun on a closing basis. And then obviously if Kijun is lost, then you're looking to see where your cloud support is, because really that's, with Ichimoku, that's going to be your next level of potential support. So let's let this progress a bit more. So there's your Tenkan, and look at that, right? So there's your Tenkan tap. Support, support, support. Perfect tap of your Tenkan support. So if you wanted to add to your long position, this is an area that you could look to do that. I'm a little bit more cautious unless I see like a really clear indication that Tenkan's been a great area to add, especially on a move like this. I'm a bit cautious on that. I really prefer for like the Kijun tests, which is basically your mean reversion. And these, to be fair, these are both mean reversions, by the way. So like when you see this, that is a reversion to mean. It's just on a smaller time frame, right? It's like this moving average essentially is a lower time frame. So like you do have a mean reversion there, but this is like the big mean reversion. All right, so let's see what happens. And look at Tenkan moving up. So now you're forming a C clamp here. So that's one thing I do want to say. That's coming later in the series. You see the big space that's widening between your Tenkan and Kijun. Kijun's flattening, although it looks like it might start curling up. This is kind of like an initial warning sign saying that you might be a little bit overbought at this point. So like what you really want to see for this trend to continue very strongly is you want to see Kijun come up to meet price. So there you go. So now again, wow, like if you look, even here, Tenkan has been rock solid support this entire way. Like rock solid support. There you go. So that's, so okay, here you go. So your first close below Tenkan, if you're looking at this level to level, and yeah, like there was a tiny little close here, but like this is clearly definitively below Tenkan, right? So as soon as you see a candle like this and you have this C clamp in play, then you're really the next level of interest. Obviously, like you're gonna have some support back here if you're looking at things from like a market structure perspective, right? Obviously, there's a bit of support that gets built up around here, which coming into this level here, like you really do have a 4-hour SR level coming pretty close to that, but keeping it strictly Ichimoku. The next real level is your Kijun. Let's see what happens. And there you go. I think it's probably going to come pretty close. And now look at that again, coming up to backtest here. Tenkan, resistance, resistance. Looks like it could reclaim this, but it came very close to your Kijun there. And back above. So there's your Kijun test. And like this is beautiful. This is honestly beautiful because what's happening here, what's very likely to happen from the looks of this early on, is that you're going to get your exit. So like if you had your long from way down here, you might be getting your exit soon. So whether you get that close below, you don't have that cross yet. So there's a number of ways to play this. Like if you wanted to be super, super aggressive because you're in like a hell of a trade, right? You might, I mean, like I would not do it this way, but like there is technically a close below your Kijun here. I wouldn't play it like that, but if you, I mean, maybe some people might, not me personally. And then price obviously moves up, and now look, it's like this is really good. Your Tenkan and Kijun acting as support, but they are really close together. Cloud's pretty close by. So now it's kind of like, let's see. So there it is. Okay, boom. So here you go. Okay, here is a close below Kijun, and it's like a pretty clear close below. and look at the next candle. So again, this would definitely be an exit. If you wanted to exit here, you could have technically exited here, as there was a closure below. This is a closure below. Looks like you're kind of forming a bit of a consolidation around here. But again, like you're looking like this is forecasting to potentially bearishly cross. So this is your first early warning sign. Well, really your second, because you're below Tenkan as well. But this is like a warning sign saying, hey, this trend could change here. And if you're long, especially if you're in a trade like this, that is an excellent trade. So even if you weren't long from this edge to edge trade, riding this up, even if you just were long from here to your first exit, which probably wouldn't have exited there, but that's 29% over a couple of weeks. So that's a very nice trade, or 30%. So basically a little over 30% on that trade. And then coming into cloud, right? So price is still above cloud, but you're coming into cloud of support. Let's see what happens. And there you go. So now you have price breaking into cloud. And this is telling you, so you still don't have a real trade here. Obviously, like you could look to potentially take it. You don't really have that. Edge to edge, do you? Well, you actually do. Just barely, and it's actually right here. So the close of this candle, you could look to take this to the downside, because you do actually get that on this candle. But that's gonna be a different video. So let's see if it plays out. Here's your edge to edge, getting pretty close. Again, consolatory, right? You just have a range being put in here. This is a very choppy price action. And this, as far as I'm concerned, that's hit. That is, you literally, again, so it was this candle where you would be looking to take that short trade, and you essentially hit the bottom cloud. That's very close. Like that, to me, target hit if you wanted to take that, but that's a different video. Now your edge to edge definitely filled. And let's see if we can find something else. So boom, there you go. So here is a trade. Now again, you don't have, this isn't an optimal entry, but it's very close, right? So again, from the first two videos, this is very close. But speaking of just straight Kumo trading, this price below cloud, you obviously have like a pretty big bearish cross here, but you do have a bit of a C clamp kind of warning you that like this could be a bit oversold. But again, price does close below cloud, and this is pretty darn close to flipping bearish. And there you go. So there's your continuation. And now, so like, where would you put your stop loss, right? So if you entered here, your stop loss, for, again, for me, it really would be behind Kijun. Like you have to be comfortable enough to let this ride, to give it some space, right? Because really the Kijun, so like a close above Kijun is your invalidation for this. And as you can see, Kijun's getting really aggressive to the downside. So just to give an idea really fast, just so we can kind of mark this level off. That's your short trade. So this is like where your entry is, just to kind of give you an idea of kind of like where you're at. And again, Tenkan moving down, Kijun moving down, Tenkan acting as resistance. So now price is above Tenkan. So this is literally like the first warning sign. Okay, so there's a couple of things going on here. Price closes above Tenkan. Looks like, you know, you're forming a range here, basically looking like you're trying to form a bit of a bottom, but you're forming a sideways consolidation. Chicken span also coming inside of price, which below was cleanly below price, back over here. So just kind of another bit of heads up there telling you that to be a bit careful. But you get your, so like that was likely a continuation move. Yep. So the exit for this type of trade, obviously, again, you're welcome to use any type of exit that you want, but it's a close above Kijun. So there, I mean, like right there, you could exit this trade if you wanted to, which if you look at just this formation, what are you in? You're really in a sideways consolidation, right? You're in a sideways range. So this could be like you look at this as like a potential impulse to move to the upside, your correction, putting in a bit of like a bit of reaccumulation. So maybe this thing's like they're looking to possibly have another leg up. But so right here is your entry, your exit. You get this close, which by the way, look, you see why you give yourself some leeway though. As far as Kijun goes, price breaks your, so again, you have this move down, closes above your Tenkin. And then, I mean, if you wanted to use your Tenkin as your stop loss, you're welcome to do that as well. Again, like you have to figure this out, like what works best for you, right? And I can only go over the rules kind of that I use, but obviously to like show you the system. But if you wanted to use a different method of managing your trade, you're obviously welcome to do that. But price comes up right to your Kijun again, and you get a little bit of a wick through, doesn't close above, and then you get another big, another nice push off that. But then you get your close here. So if you were just to measure this, entry, exit, 7.5%. So not bad. Like that's profit. Can't complain about that. So this is kind of a long example. But this ended up actually being a pretty good one. There you go. So like so here's another thing that you could do as well. Price is below cloud. Now you have to kind of think like if you would want to play this. Now you got another close below your Kijun. So you have to, this is kind of one of those plays where like you technically could go short. Price is below cloud. You're below Kijun again, but you do have a bullish TK cross here. That's something that you have to consider. But that is a short entry there. Now you have your obviously a bearish TK cross, and the price is working its way down. So your stop loss for that, again, that's a very nice trending move. I'm just going to move this down here. Right off your Kijun. So look at that. Comes right back up. Rejection, rejection, and look at that new low. So this is a big deal. That's again why you have to give your trade room and let the trend do its thing. Does it come up to your Kijun? Yes, which by the way, this is an area where you could look to compound your short as well. Like this is like a compounding opportunity. If that's something that you wanted to do, it's very close to your entry. But again, there's no closure, and price nasty basically mean reverts and then creates a new low. So at this point, again, there's different ways you could look at it, and maybe you move your stop loss below Tenkin. I don't necessarily. Oh, that this is where we're at today, so this is very current now. So again, there's like different ways that you could look to manage this, but in this case, you're short here. You're not stopped out here. You could have compounded if you wanted to, and you're still short. So if I'm looking at this right now, first warning sign is price reclaiming Tenkin. But you notice that Tenkin and Kijun are flat, right? They're very flat. They're basically parallel to each other. What is that telling you? That at the moment, there's a loss of momentum. So in this case, there's a loss of bullet or bearish momentum, right? Obviously, this is bearish. But this is telling you that there's no momentum yet. And if you likely take out one of the, it's probably this low. I don't know if there's a fractal that gets printed here, but like if you take this low out, very likely that this trend is going to continue even further. At this moment, if you're taking this short, you're up another 7.5%. So again, hard to complain, right? You're still in this trade technically. There's a number of ways that you can manage this, but again, you're really waiting for that closure above Kijun if you're looking to take kind of like this, again, you're below Kumo, below your Kijun. So just to give you an idea, again, this kind of swayed away a little bit about the video, but I thought this was actually a really good opportunity to talk you through some of these potential entries that are on this chart. Again, this is very current, obviously. So I'm going to switch gears now and try to catch up a little bit. But again, that chart was a little too good not to actually break down. So here is Alco, and I'm going to go through a few stocks, just kind of change it up a little bit and give us something a little bit. Again, like crypto's going to be really bearish for the most part. Like every chart you're going to look at, So I'm moving a little bit higher time frame and try to keep it basically to, you know, like looking at the Kumo specifically for trades. So if we can probably find a few examples here. First off, I mean, there's actually quite a few. So Alcoa is kind of one of those that gives you, it seems to give you pretty clean trades. And here's your first one, right? So if you're sticking just straight to looking at, you know, essentially price being above cloud, obviously here is going to be your first potential entry. Now, at this point, is cloud bullish or bearish yet? Don't, I'd have to go back and essentially replay this, kind of like get an idea. So cloud is very thin here. So you're looking like you're going to get a bullish TK cross. So there you go. So I think cloud is bullish at this point. Yep. So cloud is bullish. You do have your, this is an entry. So if you put your entry here, kind of like let it progress a bit fast, because this is, I'm going to try to speed this video up. First, right off the bat, by the way, which again is why you give yourself some space, look at where it comes down, right to your Kijun. So tap, tap, and then big push off, and then this is very, very bullish at this point, which is obviously, like, you can see what price is doing. In case you're wondering, this is standard settings now. So for traditional markets, typically I'll use standard settings. So that's why cloud might look a little bit different, but the theory is the same. Trade the same way. And then again, like, look at this really big move up that you got. All right, so slow it down a little bit. You know what? I'm gonna have to exit out of this. This is gonna take way too long. Let me just manually do it for you here. Try to find that. Try to find where that entry is really quickly. How far back do we go? We didn't go that far back. Right here. Okay. So here's your entry. Yep, price comes down right to Kijun. Look at this trend. Beautiful trend, right? You do not close below your Kijun. So you think about it, your entry's here at $20.85. And here's your exit. So Tenkin holds price up beautifully this entire time. So literally this entire time, you could be technically adding to your trade when you see this type of strength, right? Like Tenkin is rock solid support. And what's the first red flag or like something to pay attention to? Look at this, close below Tenkin, and then price comes down. And this will take you, like this weekly close below Kijun here, that'll get you out. Just this trade right here, you're looking at, you were in this trade for a year, almost a year, 59% gain, not bad. It kept you, like, this is a very straightforward, easy long. Again, just buy and hold. So that's that. And you'd be out of that trade. Technically, if you wanted to re-long, you could here, but as you can see, you got stopped out. So again, like, that's not looking for, I mean, you would look to play it. You could look to play it that way, certainly. And you probably, again, you would have probably taken a small loss on that trade there. The next Kumo related trade is right here. So you can see you had your first initial warning sign here, okay? Or right here, lost Tenkin, lost Kijun, price comes back up, closes above. I guess, I don't know if that technically, well, I guess technically it closed above here. So really this would have been your long. It wouldn't have been that big of a loss at all. But obviously puts in a bit of a range and then closes inside a cloud. So you lose your Tenkin, you lose your Kijun, and next step, price starts to close inside a cloud. You know that, like, this is another warning sign at this point. Then you're looking for this particular, or you're looking for this to potentially go lower. By the way, you have a very clean edge-to-edge trade here that ended up working out if that was something that, you know, wanted to take. And look how clean cloud is acting as support. So literally you get your basically short signal here. which again, different video, but comes down to the bottom of cloud, nice support, and then you lose cloud. So this is your short entry right here. What happens? Price trends very heavily to the downside. You're in this trade the entire time. And oh, wow, surprise, surprise. Price comes up here, wicks right into Kijun, still in the trade, makes a new low, ultimately comes back up here. This probably stops you out. So again, this is kind of one of those things. You get a closure above like this. Yeah, maybe not a terrible idea. Take profits on this trade. So that would be that probably gets stopped there. Again, you could have used this high as like an invalidation if you wanted to, but again, closure below Kijun, just to keep things simple. Here is your entry, and here is your exit. 21% gain. So you're in this trade for 217 days, almost a 22% gain. Not bad, right? And this is a weekly time frame. You could do this on a 5-minute if you wanted to. You don't have to do it on a weekly. I'm just doing it on a weekly time frame. This works on any time frame. Where like you could look to trade this strategy on any time frame. This is kind of like you're gonna find that there's certain time frames that you just tend to work better for you. Depends what asset you're trading, like what market you're trading. You'll find that like there are certain time frames that just seem to do better. For me, I like higher time frames, but you do this on lower time frames as well. And then the next Kumo breakout that you really have here, the Kumo breakout, well, it is a Kumo breakout, but like the next Kumo related trade that you have is on this side when basically price, so you can see you lose your 10K and lose your Kijun, price comes into cloud, doesn't lose Kijun again, comes into cloud, and then you technically you have a break here. So this, if you were to have taken this trade here and you got that closure above, you would have got stopped out. Again, your invalidation's probably pretty close by. But you could have, if you took this, you might have lost this trade. But then here is another entry. So your entry would be here, basically right there. And you, again, maybe you get stopped out here. You probably got stopped out here. But again, just another 26%, no big deal, right? So again, if you took this one, yeah, as you see this candle, you're out of that trade. If you see something like that, you're out of that trade. I mean, what would that have been? That was probably like actually a decent size. Yeah, 15%. Like that could be that wouldn't have played out very well. But this one looks pretty good. And then again, so you're out of your trade here. Price reclaims your Kijun here. So this would be a re-entry if that's something that you were looking to do. And then you probably exit here. So you see, again, price closes, you have another close above Kijun, above cloud, looking to take that to the upside there. Likely your exit here on this weekly close below 10K. Oh, actually, no, I'm sorry. That's wrong. That's wrong. Although you could look to play it that way. But actually, your close is up here. So that was my mistake, because you came down to Kijun. Kijun acted as really good support, got another push to the upside, and then it was this weekly close that that's very likely would have invalidated it for this specific type of setup that we're talking about. So your entries here, you're another 26%. Well, it's like Alcoa is like 26. Everything's 26%. You get the point. Kind of like how you can play that, right? And then here's the next one. So basically here would be your short entry because price is now below cloud. Okay, so you lost your Tenkin, you lost your Kijun, price comes into cloud, breaks the bottom side of the cloud. This is an entry. Your stop loss, you have to be willing. So that's the thing. If you don't take this trade, that's okay. But you have to understand like where your stop loss is, and are you willing to risk that invalidation? Like, are you willing to risk that much to find out if you're right on this trade or not? And some people might not be, but that is your invalidation again would be above here, which is a pretty decently sized invalidation. And what happens forms a bit of a range here before breaking down. So here you probably feel a lot better about being in this short buy now. you're starting to get the angulation to the downside. Things are shaping up. You have your cross. So if you go back and look at this specifically here, just to kind of see like what things look like around then, well, I'm going to tell you that seeing this, you obviously got your bearish TK cross, price closed below cloud, cloud's bearish, this is bearish, like this is bearish. Yes, your invalidation is very steep, like it's quite a ways up there, but this is bearish. The only thing that you're missing from this to be an optimal setup is your Chiku span it's below price, but it's still above cloud. So that's really the only thing stopping you. But anyway, actually, you can see how this plays out a little bit because I'm kind of curious to see, because it does range for a little while. Let me speed this up. So just range, then it kind of made a new low there, and there you go. So it just gets, now it's obviously starts to trend down. Chiku span is still technically not giving you like an optimal entry, but this with this setup, that's a short. Exit that. No, I think so. It was right here. And again, Tenkin, ultra strong resistance, does break above a little bit, kind of your first warning sign, but it doesn't come up anywhere near Kijun. And the first time that it comes up and actually closes above Kijun here, this anywhere in this region, probably if you wanted to, again, sticking to kind of like the rules of the video, right? You would technically be stopped out here. So from your entry to where you technically get invalidated, so whether it be on this candle or if you were even a bit more patient, it would be this candle, but this is the first candle close above, 45% move to the downside over 469 days, so well over a year, right? That you're literally just short Alcoa. Price right here gives you another short entry. Closure below Kijun is actually this one right here. Gives you another short entry to the downside. And then again, I'm not going to go through every single one, but then here's another one where you're getting price above cloud, right? There's your closure above cloud. This is your entry here. And you might be stopped out here. So technically rules are rules, right? Like if you're trading that way, you'd be stopped out for a small gain. And then like the very next week, look to reopen your long because now you've closed back above Kijun. So again, depends on how you wanted to play this, but just sticking to what I've been going over the whole video so far, your Kijun could probably stop you out there, but then you'd be right back in. For this, look at this, Kijun, very nice support, very nice support. Very nice support. Technically like a slight close below. That's up to you if you wanted to do that. Close at 44.07. Kijun's at 44.20. Yeah, I mean, just like slight close below. Either way, still a phenomenal trade if you wanted to be that strict about it. But then you could get right back in the next week and ride this up again. Now, current price. This is a clear warning sign. That's obviously very clearly below Kijun. You're getting a downside, kind of a bit of downside angle on your Tenkin. It looks like it's going to come down pretty aggressively here. And then now on this current week, what's your resistance? It's Kijun. So this, you would be out of your long. Because this is your warning sign. Lost your Tenkin, lost your Kijun for the time being. What's the next support that you really have below you? Your cloud. And for the purpose of this video, when's the next trade? Like if you're looking to take a short trade, right? When's the next trade that you're looking for? It's not until you break cloud, which is a long ways away. Now, if this is something like this, where it kind of like chops around for a while and then breaks cloud over here, then is, you know, something that is a little bit more favorable. But for the time being, your cloud is very far away from our prices. And then obviously, if this was to close above your Kijun again, you could look to get long if you wanted to. This is just it's a little ugly up here, not gonna lie. But again, that's basically that's basically how you look to trade the Kumo. That is one way that you could look to it. There are probably going to be another few videos as far as other trade strategies that you could use as well. This one ended up being kind of a bit long-winded, but there's going to definitely be multiple videos within this series that teach you other trade management strategies. So I know in the optimal entry series, I kept it very simple. Like you just wait for the opposite TK cross to exit your trade. It is an incredibly oversimplified method of trade management. Just to be clear, it's the same thing here, where like I kept it as simple as it can be and just used the Kijun as a basis for an invalidation. Like there's other methods that you can use to determine whether or not you want to enter or exit that trade, right? So in this case, again, the Kijun was kind of the one that was used for trade management. There's certainly other methods that you can use, but just to keep it simple for the purpose of this video, that's what I wanted to do. And then again, later in the series, we'll go over those other ways that you can use to go. And again, if you like it, you can use it. If you don't like it, you can use what you like. But just teaching other methods to manage your trade. So hopefully there is one more thing that I want to go over now that I think about it. So I wanted to go to a very specific chart. And this would be this chart. This would be this chart. So right now, you're actually getting a pretty nice breakout, right? So like if you're looking at this, technically, like if you're looking to get long, could have maybe got long here. Now this is a 5-minute chart, but you could have possibly got long here. Maybe you would have been stopped out here, depending on how you manage that trade. And then again, maybe could have got back in here. So I'll kind of tell you why you probably wouldn't have been in this trade to begin with. Although this is actually looking pretty good. Now keep in mind you're on a 5-minute. So if you're on a 5-minute, you're probably scalping. So you're not necessarily looking for major, massive moves. But in this case, the trade that you would be taking here would be a long, and you would hopefully be in this long already. But I'm going to show you why you probably wouldn't be. You zoom out. This was that chart that I had posted in the slides. Now, here you have a very clear, definitive downtrend. So you have, if you're looking for this type of trade, right? Again, still kind of like choppy. Still very much choppy. So something like this you wouldn't be in a trade. This would be a trade trigger right here. And you would have likely, again, kind of like taken it from here to probably here when it closed above Kijun, re-entered, and then got stopped out again here. So a little bit of profit there, but you would have rolled a pretty fair amount of this trend down, to be honest. But the reason why I wanted to show you this chart is if you come across a chart that you're interested in trading, and it looks like this, and you want to use Ichimoku, I will tell you right now that's likely not a great idea, because this is going to destroy you this is very likely going to be bad. It's not going to end well. And this is what this is this is like this is just consolidation. It's a very nice range actually that formed here. But if you look at the cloud itself, it might be a little bit hard to see. It is massive chop. So you see how flip-floppy the cloud is? Like that's a technical term that I'm going to make, by the way, flip-floppy. But like you can see how many times the cloud twists, and just look at price. Price is violating this cloud like a ton of times. Up, down, up, down. There's absolutely zero respect that's happening through here. When you see this, run away. And if you have to trade this for whatever reason, if you like, I have to trade USDT on the 5-minute, then I'm going to tell you right now, looking at this, the better method would very likely to be like incorporating a range trading strategy, which I have a series on range trading strategy, of course. But this, I just wanted to leave this for the end of the video to demonstrate and show you when not to use Ichimoku and when it's not the most favorable, because you will not survive this more than likely unless you're very lucky. But when you see a range like this, or if you see any chart on a higher time frame, I can think of one more. It's a really quick example. This is a relatively new stock. It would be Dutch Bros. So this is a relatively new stock. Let's go to weekly. Oh, and this was on standard, by the way. standard settings for dot, it doesn't matter, which it shows you the exact same thing. But when you see a chart like this, run away. So here you go. So this basically, and again, this isn't really fair to say because this is a new asset. There's not really enough price action history to really get like a good gauge as far as like how I would want to trade this anyway. But I'm telling you, this is sideways. It's just a range. It's a consolidation. This is fake out city right here. As you can see, like this is fake out city. Stay away from it. So hopefully this video helps. You know, if there's another video that you would like me to do to give you more examples, I'm happy to do so. But that is the end of the charts. So here's my social media where you can get a hold of me. Twitter, as usual. It's kind of like my preferred place these days, to be honest. Obviously, I spend a ton of time in Discord as well. But Twitter, follow me on there. Telegram, we have a Telegram group. And YouTube, which you're probably watching this on YouTube. Obviously, that's a link to my channel. So hopefully this video found you well. And there's so much more coming in this series. I can't even begin to explain how many more videos are going to be in the Ichimoku series. This is a very, very big topic for me that I use extensively. But again, there's so many methods to trade Ichimoku as well that you're going to see. Like there's going to be a lot for you to choose and pick and choose from. And the parting thing that I will say again, just to reinforce, is that as you go through this series and you progress through these series, take notes about all the different strategies. And when you're trading, when you're paper trading, hopefully, or when you're testing this strategy to see what sticks with you and what you like about it, you don't have to use every single thing that I go over. So I just want to be clear about that. Pick and choose what you like. Create your own rule-based strategy system, essentially. I mean, again, there's kind of some strict rules sometimes when it comes to Ichimoku, but create your own kind of way of using it and how you like to trade it and what works best for you, right? And that's like I said with time frames, you can use Ichimoku on any time frame. It's the same way of trading it, but you'll find again that there's going to be certain things that you just kind of tend to stick to because you have more success doing. So with that being said, trade safe out there. We'll see you on the next one.